Hello traders, welcome back to the Forex Geek, where we dive deep into the tool that can help you make smarter trading decisions. In today's video, we are going to be talking about the midnight gap trading strategy, a powerful approach that takes advantage of price gap between a market close and its next open. So stay with me until the end of this video as we will cover everything from understanding what overnight gaps are to the exact strategy you can use to trade them efficiently. Let's get started. Let's first of all, we have to look at the strategy overview. The overnight gaps trading strategy is built around price differences that occur between a market close and its next opening price. These gaps are often caused by events such as news, such as um geopolitical news, or event data release, or any report. When the market open at a very different price than it closed, it creates an opportunity for traders to profit from the movement. Now let's dive into the chart and see how we can trade with the overnight gap trading strategy. To trade with this overnight gap effectively, is essential to understand the mechanism of gap trading and develop a structured approach. Now we have different types of the strategy we can use to approach this overnight gap trading strategy. The first strategy we can use is called the gap fill strategy. This approach is assumed it is from an approach of an assumption that most gaps will eventually be filled. Like as you can see from my chart, this gap, there is a rule that any gap in price must come to fulfill or fill this gap. It can never be left unfilled. Even if it takes a while, price would eventually come and close this gap. Now you have to enter a position opposite to the direction of the gap in anticipation that price will return to this previous level. So I will show you an example of how you can take the trade. You just need to, when you see a gap in price in real time, you just look for your entry and put it at the opening of the market where the gap opened from. You put your entry at that area. You can put your stop loss below any swing low of your choice. This strategy is very simple, the gap fill strategy. Then you make sure you just target 1:2, 1:1, as the case may be. You just need to ride the move to close the gap. So this is the first strategy you can use to approach the overnight gap trading strategy. Now the second strategy you can use is called the breakaway gap strategy. It's called the breakaway gap strategy. Now the breakaway gap strategy is if you identify a breakout gap that aligns with your prevailing market structure, you have to enter in the direction of the gap, aiming to capitalize on the continued momentum. So as you can see this chart, you can see the market is trending downwards. This is a trend, is a bearish market, as you can see. So since we know that the direction of the market is bearish, when we come to the chart in real time, we see that price closed at this area and gapped to this area. Once we come to the market and see that price has gapped to this area, what we need to do is to take our trade immediately. You put in your, you can enter your sell trade here. You put your stop loss above the wicks, then you ride this momentum down. When riding this momentum down, You can target 1:2, 1:3 as the case may be. You can also manage your trade in this strategy by securing profit, taking partials, or you put your stop loss in front of your entry position. Let's assume that this line is my stop loss line. You take your stop loss from where your stop loss is and you put it in front of your entry. When you put it in front of your entry, you manage the trade that way, so that in case price reverse against you, you will still be in profit. But by as the case may be, this trade was a very successful trade. If you wanted to take 1:3, 1:2, you would have banked this and you are out of the market. Now let's look for the third strategy. These strategies are very easy. The third strategy is called the exhaustion gap strategy. It's called the exhaustion gap strategy. For the exhaustion gap strategy, we look for any signs of reversal. Any signs of reversal, and you enter in the opposite direction to the gap direction. And once you see your confirmation is when you enter. So I will explain this using the chart. First of all, as you can see, the market is trending downwards. You can see from the trend line, it shows that it's trending downward. Don't forget, this strategy is about the exhaustion gap strategy. So we look for price to show signs of exhaustion to cover this gap it has left behind. So what we will do is, when we notice that price has gapped, as you can see, price here is already showing signs of exhaustion by showing us this two double bottom. A double bottom is actually a sign of reversal. When you see a double bottom, you know that price is you know that price is showing signs of exhaustion. So what you need to do is wait for a particular time to enter the market. You can use when price break the neckline of your double bottom, or you can still trade using when price creates higher highs, higher lows, higher highs, higher lows, as the case may be. You can also use candlestick pattern. When you notice that price have showed you your entry pattern like this doji candle with followed by a bullish engulfing candle, you can decide to take your trade from there. When you take your trade, let's not forget we manage our trade by putting our stop loss below that level, and we can aim at targeting 1:2 or 1:3. Now a common exit strategy for taking an overnight gap trading strategy is always to target the area at which price opened the gap from. You can decide to target the area where price opened this gap from. You can exit at such area, or you can exit by taking partials, like I explained in the previous example, that you take partials, you put your stop loss above your entry while price keep going, so that you can lock in some profits. It is also called the trailing stops. That's why you can lock in a lot of profits while price move in your favor, to allow you to capture larger gains while protecting yourself from sudden reversals. Alright traders, I believe we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, share and subscribe, and turn on the notification bell so that you will not miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.